Hello there, Maverick traders. It is October 26th. We are heading into Halloween, so this market is definitely a scary one at the moment. Let's jump into it. In this session, we're going to take a look at what happened today, look at some of the news, and we'll break down the equity markets. Then we'll take a look at these markets with a fresh set of eyes and say, did something change? Do we have a change in score? And as always, we've got setups here. I've got one bull, two bears for you, but I got to admit, I don't really love anything bearish at the moment. The weakest stuff has already fallen through the floor, and everything else is holding up, which I don't really want to touch.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Today ended up being another down day in the market. So let's jump into the news first. In the morning, we got a really good GDP report, up 4.9%. Now look, that is a stunning report. It's a great report, great number, except for if you are in the stock market, it's not what the market wanted. Remember, the market wants the Fed to back off raising interest rates so it can get its feet under it. And this number, just like all the other numbers we've had over the last 2 weeks, shows that the Fed is still likely going to be raising rates. The market did not like that. Durable goods up 4.7%. Look, we've just had some killer reports. Retail sales last week, these two reports. This was an interesting thing, though, because if this report came out 3 or 4 weeks ago, it would have spiked the bond yields higher. Initially, that's what happened, but by the end of the day, the bond yields were actually down for the day. And the dollar, its spike also reversed and really didn't break out. What we're seeing is exhaustion. We're seeing that bad news is no longer sending these things higher. Here's the problem. The bad news is still sending the stock market lower. As you can see here, Dow down 0.76%, S&P down over a percent, Q's down 2%, and the Russell, that has been absolutely atrocious lately, got a little bit of buying. At one point, the Russell was up over 1% today, but you could see by the end of the day, lost most of it. Oil had an up day, but look, this has been down for the last couple of weeks, and gold flat. If we take a look at the internals, you can say today was like a 50-50 day. Half the stocks went up, half the stocks went down, but take a look at that 50-day moving average. It is ugly. It is absolutely ugly. 83% of stocks below their 50-day moving average. That is definitely showing a very, very bearish market here. Now, I actually want to go into some live interactive maps. So I'm going to bring in an interactive map here, and we're just going to take a look at it because I want you to see where we are in the cycle here. So S&P came up, we fell, and you can see here we're now falling through some support levels. We talked about support at this 42.20, it broke that. We talked next about support at 41.70, it broke that. So the question is, where is the next potential support for the market? I'm going to pull this down here. We're again looking at, we found some support over here. Where is that number? That number is basically at 4,100. So 4,100 is the next level that we are likely to see in this market. That is another 1% from here. We did have some positive news after the bell from Intel. So we could get a little bounce up. As you can see, we got little bounces here on Monday and Tuesday, but it just fell right apart. We could easily see a little bit of a bounce. This is what bear markets do. They fall and then they bounce. They fall and then they bounce. This is where we are. You may want it to be different. You might hope it was different, but too bad. This is where we are. This market is bearish at this moment. I also wanted to take a look at the VIX. I talked last week and I said this market is in trouble. And I said we need a spike up to 26 to 30 for the flush out, for the panic. We didn't get there. We're not there. That's why I think we still have some downside left to go in this market. As I said, good news after the bell. It's a Friday. We might get a bounce. But there is nothing technically telling us that this bearish move is over. If we take a look at the heat map, though, remember, today was a 50-50 day. Advancers versus decliners. You can see where all the selling was. All in the big cap tech. And that is the biggest part of the market at the moment. And they got absolutely crushed. I think we're going to continue to see some selling in here, but you can see the average stock is starting to bottom out. The average stock is starting to act okay. Look, I still think we have more downside left to go, but this is the stuff you start to see at the bottom. 83% below 50-day moving averages. You start to see the real big things that held everything up start to get absolutely crushed, but then everything else starting to settle out. Look, I am not calling a bottom. I still think we have more bearishness, but I don't think we have 2 months of bearishness, 6 months of bearishness. I think we have a week and a half, maybe 2 weeks of bearishness. The question is, did anything change? Well, we were at a -3 already. We were saying this is the most negative you can get. We are at a -2 for the week. Look, nothing has changed. We are still leaning to the bear side, just like we've been talking about for the last couple of weeks. So let's go in to take a look at some potential trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
There's no trade setups I really love here. Let me tell you why. The weakest stuff that I like to short, they've already been taken out and shot. I mean, some of them are down 70, 80% from their highs. The things that haven't broken down yet are holding in. I don't want to short those, but I also don't want to short the weakest things that have already been crushed. On the long side, there's a few things that look okay, but again, I still think this market has downside. I'm not really running to find some good buys here. I'm very happy to wait and pick my shots. So let's just take a look at a few potential trade setups. This is FRO Frontline. This is in the energy sector. The thing I liked about this is that the energy sector had a pretty big pullback at the first part of this week. This stock didn't move. I'm looking at a 21-22 spread. That is not a very heroic trade. I'm not looking for all that much in 21 to 22. Basically, I'm going to pay about 45 cents. I'm going to have 55 cents of upside, and that's it. I am not looking to be a hero here on any trade to the upside. And on the downside, the weakest stuff has already been crushed. This is one that I liked last month, and you can see it's just been basing for a month. These candles here are telling you they were trying to bounce. Every time they got knocked back down, to me, a breakdown below 15, this thing's likely going to at least 14. So I'm going to play a 14-16 bear call spread. I'm going to get in probably about $1.25. I've got 75 cents of risk, and I'm just waiting for this one to fall. If it takes off and runs, I've got my upside, and I'll take my loss, and I'll move on. And here we have Baidu, another one that had a big fall, and we're just now some basing. It is not able to bounce. When a stock falls from 135 down to 105, that's about 30%, and can't bounce back a bit, that's telling you it's going to base for a while and fall. Now, this one I don't think is ready to fall right now. It could stay in this base for a while. That's why I'd like to do something with some theta, not a lot of delta. So I'm looking at something like a 108, 112 bear call spread. I'll bring in probably about $1.30, $1.40. That means I'll have 260 at risk, but it's going to be all theta. As long as this thing stays sideways or goes lower, I'm going to make a profit on this, and if it breaks out, I'll take my loss and I will move on. Let's talk about tomorrow. 4100. That's the next stop for the SPX. We are likely going to get a bounce. The overnight futures are up about 0.5% on the S&P, about 0.75% on the NASDAQ. We had that yesterday, and then when I woke up in the morning, we were down 1% in the futures. That could easily happen tonight. Whatever happens, you want to be shorting bounces. You want to be selling bounces. That's really where we want to be here at this moment. We also have big economic news tomorrow with the PCE price index. This is the Fed's favorite inflation indicator that comes out before the market. And we do have some energy and some biotech stuff before the market as far as earnings goes. As I said, this market's in trouble. I think we need the flush out. We need the capitulation bottom if we have any chance at all to move higher. Until that happens, you want to be short. You want to be short. If there's rallies, you want to sell them. Once we get the big flush out, which I do think is going to be fairly soon, in the next week or two, that's when I think you can start to shift away from being bearish. Until that happens, got to stay bearish. That's what the market's telling us. Goodbye, everybody.